The Russian ruble is tracking the downward trajectory of oil for the fourth day in a row, as increases in US drilling add to signs producers will keep pumping crude amid a global glut. According to Bloomberg, the ruble depreciated 0.6% to 64.45 versus the dollar at midday on Monday, its weakest level on a closing basis since January 28th. ING economist Dmitry Polyevoy said Russia's dependence on oil would affect the sliding ruble.
Everybody understands that Russia is still highly dependent on oil, and therefore the continued decline in oil prices to nearly $50 per barrel today is the biggest factor behind the ruble depreciation, because that is why the ruble is trying to compensate for the weakness in oil, and one of the indicators we may look at in order to assess the behavior of the ruble is to look at the ruble-denominated oil price.
But despite the negative indicators, Polyevoy is predicting an oil price rally.
We think our base case scenario at ING is that oil won't stay at the current levels for long, and it will recover to at least 60 or even slightly higher levels by the end of this year. So therefore our base case scenario assumes that the ruble should not weaken much, even despite the chance that in the very near term it may weaken further. But at the same time, as I said, much will depend on oil. So if we enter the scenario, then oil stays at $50 per barrel, there might be some reassessment of the ruble outlook.
Moscow's budget is largely dependent on fossil fuels, with natural gas and oil accounting for half the country's budget revenue. Russia's war against Ukraine has led to Western sanctions on the Russian economy, and last year's collapse of oil prices plunged Russia into a financial crisis that has since become a deep recession.